Welcome back to Coffeesodes, everyone. Can you believe it? We're already on episode 19 of our deep dives. If you're curious about the research we're using for today's episode, all the details are in the episode description. So get ready, because today we are tackling a question that's been stirring up a lot of debate. Is the metaverse dead?
Ooh, that's a good one.
You've probably seen the headlines, the one saying it's over. The hype around the metaverse has definitely died down since its peak a couple of years ago. And some big tech companies even, they've stepped back from their metaverse projects. But here's the thing. There's still a ton of money being poured into this. Like, we're talking over $120 billion invested just last year. And McKinsey, those business experts, they're predicting the metaverse could have a $5 trillion impact by 2030. So what's the truth? Is the metaverse fading away, or is it quietly transforming behind the scenes?
Yeah, it's hard to tell for sure with all the noise out there.
To help us cut through that noise and uncover the real potential of the metaverse, we're going to put on our financial detective hats, our mission, using financial analysis to separate fact from fiction. Is the metaverse just a fad, or does it have a revolutionary future? Are you ready to solve this mystery?
Absolutely. I'm always fascinated by how public opinion and, investment trends, they don't always match up. By looking at the financial data, we can see what's really going on beneath the surface.
Love that. So let's rewind a bit and unpack this whole hype versus reality thing. Remember late 2021, metaverse was the hottest topic. Companies like Facebook, now Meta, were all in on this, right? Betting big on the metaverse. But lately, things have been pretty quiet. What happened?
Well, I think that initial excitement, it was fueled by some really big promises. This idea that the metaverse was going to be the next evolution of the internet just around the corner. But as we all found out, developing these complex technologies, it's not easy. And getting people to use it, that's even harder. It takes time and a ton of resources. And when those early, maybe a bit too optimistic visions didn't happen right away, some companies understandably decided to rethink their plans.
And that's why we're seeing Microsoft and Disney, for instance, pulling back from some of those metaverse projects. But at the same time, other players are going all in, putting billions into this. It's like we're watching two different things happening at once.
Yeah, it's a strange mix of signals for sure.
It really is. And we have to remember the metaverse isn't just about virtual worlds and games. It's about creating new ways to interact, to work together, to shop. Take BMW, for example. They're using NVIDIA's Omniverse to create a digital twin of their factory.
It's amazing what they're doing over there.
Wait, a digital twin of a factory? What does that even mean?
It's basically a virtual copy of a physical thing. In BMW's case, it lets them simulate and study how their factory operates in a virtual space. This means they can test things out, find problems before they happen in real life, and make their factory run better. It's like a sneak peek into the future of their manufacturing.
Wow. It's like something out of a sci-fi movie. But this isn't just for factories, right?
Oh, definitely not. Digital twins can be used for almost anything. We're seeing them in healthcare to model organs and test out treatments. We're seeing them in city planning to simulate traffic flow and optimize infrastructure, even in environmental monitoring to try and predict climate change.
So it's not just about escaping to these virtual worlds. It's about using these virtual spaces to actually solve real problems. That's a perspective I hadn't really thought of before.
Yeah, it's exciting stuff.
It is, and it's happening everywhere. We even had Metaverse Fashion Week in Decentraland. Luxury brands like Dolce & Gabbana took part. And Nike is the king of the metaverse right now with their NFT sales. These are all real companies, engaging with the metaverse in tangible ways. It's definitely more than hype.
Totally. And that leads us to a really interesting case study, Decentraland. It's one of the leading decentralized metaverse platforms out there, a great way to understand the financial potential of this whole concept.
Okay, let's dive into Decentraland. It's built on the Ethereum blockchain, and it uses its own cryptocurrency called MANA, right? Tell us more about how this platform works and why it's a good case study for understanding the economics of the metaverse.
Sure. Decentraland is fascinating because it's like its own digital economy. Imagine a world where you can buy land, build on it, create experiences, even sell things, all using M&A. It's the currency that makes this virtual world tick.
So it's like a mini economy operating within a virtual space. That's so cool.
Exactly. And because the value of Marinate is tied to how much activity there is on the platform, studying its price can tell us a lot about how the metaverse is performing economically. In fact, the research we're looking at today used the price of Marinate to try and figure out the metaverse's potential.
This is getting really interesting. To predict future trends, the research used a model called a seasonal ARIMA model. I have to admit, when I first saw that, I kind of blanked. Can you explain what this model does and what it tells us about the future of Marinade and, the metaverse in general?
Sure. Think of the seasonal Arima model as a detective for financial data. It goes back in time and analyzes past data, looking for patterns that repeat. We call these patterns seasonality.
Oh, okay. Like how ice cream sales go up in the summer and down in the winter.
Exactly. Just like there are predictable ups and downs in ice cream sales, there are patterns in financial data. The seasonal Arima model looks for these patterns in Marinade's price history and uses them to make better guesses about where the price might go in the future.
So it's not just looking at a straight line of data, but at how things naturally go up and down over time. Makes sense. What did this model uncover about mayonnaise's future?
Well, the study found a downward trend in the price of mayonnaise based on its past data. But there's a catch. Predicting prices, especially for something as volatile as cryptocurrency, is really hard. It's like predicting the weather weeks in advance. You might get a general idea, but getting those specific details is almost impossible.
Right, because predicting the future is never easy, especially with something like crypto. So this model gives us an idea of the direction things might be headed, but we can't expect it to be super precise.
Right. It's about the overall trend, not specific numbers.
Got it. So we see this downward trend, but is that the whole story? Besides just past prices, is there anything else that can give us a clearer picture of Manus potential, like another tool in our detectives kit?
There is. It's called the log periodic power law singularity model, or as we call it, LPPLS.
LPPLS. Okay, that's intriguing. What is that, and what does it tell us about M&A and the metaverse?
This LPPLS model is like a bubble detector. It's designed to spot times when prices in the market are behaving strangely, getting way too high or way too low, faster than the actual value would suggest.
Deep bubbles. You mean like those things that eventually pop and everyone panics? What do bubbles have to do with M&A and the metaverse?
In finance, a bubble happens when the price of something like a stock or a cryptocurrency gets totally out of whack with its real value. This can happen because of all sorts of things: hype, fear, even people just blindly following the crowd. And these bubbles can form when the price is going up really fast or when it's crashing down.
So it's not just about whether the price is going up or down, but about how fast and how intensely it's changing. I can see why a bubble detector would be helpful, especially with crypto and all its ups and downs. But how good is this LPPLS model? Has it been tested?
It has. And the results are pretty amazing. For example, it predicted big price shifts for Sand, the cryptocurrency of the Sandbox Metaverse platform, and ETH, or Ethereum, back in April 2023.
Wow. If it can predict those swings, this LPPLS model could be a game changer for figuring out the future of the metaverse. But let's talk about Mananae specifically. What did this bubble detector show us about Mananae and Decentraland? Were there any hidden bubbles in the data?
There were. And here's the really cool part. The model didn't just suggest there might be bubbles, it actually pinpointed when those bubbles started and ended with amazing accuracy. It's like having a time machine that can tell you exactly when the market went a little crazy.
So it's not just saying, hey, there might be a bubble somewhere. It's giving a timeline for those periods. That's really valuable info for investors. What kind of bubbles did it find for Mananae? Was it all bad news, or were there some good surprises?
Well, it did find two big negative bubbles, times when the price of an NA really tanked. But get this, it also found 6 positive bubbles, times when the price shot way up. This suggests that there's more potential for growth than for crashes in Decentraland's market.
6 positive bubbles. That's awesome. Even if the overall trend might be going down right now, those periods of growth are really encouraging. Makes you wonder, what if you could, ride those bubble waves?
That's exactly what the researchers wanted to find out. They tested a trading strategy that used the LPPLS model's bubble signals, and the results were incredible. This strategy, in theory, could have yielded over 15,000% in returns. Compare that to just holding on to May, which only yielded 477% over the same period.
Wait, 15,000% versus 477%. Those are some seriously impressive numbers. Shows the potential of this model for spotting big opportunities. But before we get carried away with dreams of metaverse riches, let's step back for a second. The study covered 2018 to 2023. That includes the whole COVID pandemic, right? How did that impact the analysis? Did it mess things up?
That's a really good point. The pandemic definitely made things more complicated. Think about it. Lockdowns, governments doing all sorts of things, tons of economic uncertainty all over the world. It had a huge impact on how people invested, and crypto markets were especially sensitive to those changes. It's very likely that those huge price swings we saw, those bubbles we were talking about, were partly because of the pandemic.
So those COVID years could have skewed the data. Things might be a little less crazy now that things are calming down.
That's a fair assumption. As we move further away from the peak craziness of the pandemic, we might see less intense ups and downs in the metaverse market. So the future might be a little more predictable than those chaotic COVID years.
That makes sense. Okay, let's take a break here and recap. We've established that the metaverse might not be as hyped as it was, but there's still a lot of investment happening. Platforms like Decentraland are showing real promise. And this LPPLS model, it's like a secret weapon for understanding how this market works. It can even predict those bubble periods. That's super valuable for investors. But we also need to consider that COVID probably played a role in those big price swings, which makes our analysis a bit more complex.
It's a puzzle with a lot of pieces, that's for sure.
It is. Now, in part 2, we'll explore what these findings mean for the future of the metaverse. Stay tuned.
Looking forward to it. Welcome back. It's great to continue this metaverse deep dive with you.
I'm excited to jump back into. We've crunched the numbers and spotted those bubbles, but what does it all actually mean? Where do we go from here? What should someone who's never heard any of this before take away from it all?
The interesting thing is, this analysis really challenges that simple idea that, the metaverse is dead. Yeah, the hype has died down, but that's pretty normal for new technologies. Think about, the early days of the internet or even the smartphone. There's always that initial excitement, and then, things settle down as the technology develops. The important thing is that people are still investing in it, and we're starting to see real-world uses. That tells me the metaverse is changing, not disappearing.
Okay, I get that. But let's be real for a minute. 15,000% returns from those bubble predictions. That sounds almost impossible, right? Could anyone actually get that kind of return? I'm no Wall Street expert.
Yeah, I know what you mean. It's important to remember that those were just simulated returns. Assuming perfect timing based on the LPPLS model. In the real world, there's always risk. You can't predict the market perfectly. Those simulations are more about showing the model's potential, not about getting rich quick.
So it's more like this model could help you spot opportunities if you use it right, but it's not a guarantee of those crazy returns.
Exactly. The real lesson is that understanding market cycles, especially those bubble patterns, is really important if you're thinking about the metaverse. It's like having a map of dangerous territory. It doesn't guarantee you'll find treasure, but it might help you avoid falling into a trap.
I like that analogy. So for someone who's thinking about putting some money into the metaverse, what's the key takeaway? What should they be thinking about?
I think the biggest thing is to think long-term and be cautious. It's not about getting rich quick. Do your research, understand the risks, and don't invest more than you can afford to lose.
Solid advice. But let's zoom out for a second and think about the big picture. What does all this tell us about the future of the metaverse as a whole? Will it really reach that $5 trillion potential that McKinsey predicts? Or is that just wishful thinking?
That's the big question, isn't it? I think the potential is definitely there. We're seeing innovation in all kinds of industries, from manufacturing and fashion to, entertainment and healthcare. It's proving to be a really useful tool, not just a gimmick.
And as technology keeps getting better, that metaverse experience is only going to get more immersive and more accessible, right?
For sure. Faster internet, better VR and AR devices, and easier to use platforms will all contribute to its growth. It's like how those old, clunky cell phones turned into the smartphones we use today. The technology is constantly evolving, making it more engaging and user-friendly.
That makes sense. But there's also this whole debate about centralization versus decentralization. Some companies are building their own closed metaverses, kind of like walled gardens. Others are pushing for open platforms where users have more control. What do you think about that debate?
It's a tough one. There are good arguments on both sides. Centralized metaverses, the ones built by big companies, they can be more polished. They have the money to create amazing graphics, make them easy to use, and keep them secure. But they also bring up concerns about privacy, censorship, and who really controls things.
So a trade-off then. A smoother experience, but maybe less freedom.
Yeah, kinda. Decentralized platforms, on the other hand, they're all about user ownership and community control. They use blockchain, which gives users more control over their data and assets, but they can also be messier and harder to use, at least for now. It's still early days.
So there's a balance to be found between those two approaches. Seems like the future will probably involve a mix of both, right?
That's what I think. We're already seeing those hybrid models popping up, blending centralized and decentralized elements. It's kind of like what happened with the internet. We started with those closed networks and then moved toward a more open system. The metaverse is probably going to follow a similar path.
Good point.
Yeah.
It's early days. There's lots of experimentation going on. But if we'll bring this back to that financial analysis we were talking about, what does it mean for investors? Does it matter, from an investment standpoint, whether a platform is centralized or decentralized?
It definitely can. Investing in those centralized metaverses often means betting on a specific company, like Meta or Microsoft. You're basically saying, I believe in their vision and their ability to make it happen. With decentralized platforms, you're investing in the platform itself and its cryptocurrency, like MAA with Decentraland.
So it's like choosing between investing in a specific company's stock versus like a broad index fund that covers a whole sector.
Perfect analogy. Each approach has its own risks and rewards. Investors have to think about their goals, their risk tolerance, and whether they believe in a specific company or a whole platform.
Right. There's no one right answer. Depends on the person. But we can't forget about policymakers. They have a big role to play in shaping the metaverse's future, right? It's not just a playground for tech companies and investors.
Absolutely. Policymakers are wrestling with some tough questions about the metaverse, trying to figure out how to regulate this new space.
Like the Wild West out there, they're trying to set rules for a world that's still being built.
Exactly. And their decisions are going to impact how the metaverse develops and how accessible it is to everyone. We're talking about things like data privacy, what content is allowed, how to tax virtual goods and services, even virtual property rights. These are all new challenges, and policymakers need to find a balance between letting innovation happen and protecting people.
So it's not just about the technology itself, but about the rules and ethics that will shape how we interact and do business in this virtual space.
Precisely. The decisions made today will have a big impact down the road.
Okay, so we've covered the financial side, the tech advancements, and the regulations. But let's not forget about the human element. How do you think the metaverse will change how we live, work, and connect? What's the human story behind all this tech?
That's what really gets me excited about the metaverse, its potential to totally change how we interact. Imagine, attending concerts with friends from all over the world, working together in these immersive virtual offices, or even visiting historical sites and museums without leaving your home. Experiences that used to be limited by location and cost are now becoming available to anyone with an internet connection.
Those are some amazing possibilities. Breaking down barriers, creating whole new types of social experiences, even making education and culture more accessible.
Exactly. And who knows what other creative uses we'll see as the metaverse keeps growing. We're only just getting started.
It's like we're at the beginning of a new era. So what are you most curious about in the metaverse over the next few years? What excites you personally?
I'm really interested to see how the metaverse changes education and healthcare. Imagine students learning about ancient Rome by actually walking through a virtual coliseum, or surgeons practicing difficult procedures in a virtual environment so they can get better without putting patients at risk. The possibilities are endless.
Those are game changers for sure. I like that cautious optimism. I think it perfectly sums up our conversation. We need to be aware of the challenges and risks, but also excited about the possibilities this new world offers. One thing's for sure, the metaverse is definitely not dead. It's evolving, attracting serious investment, and driving innovation in ways we're just starting to understand.
Right. And although the future is always unpredictable, the data we've looked at suggests the metaverse could totally revolutionize the world.
Before we wrap things up, let's bring it back to you, our listener. You've been with us through all the research, the models, the predictions, but what does it all mean for you? What's the big takeaway from this deep dive?
That's the key question. I think the biggest thing to remember is don't let the headlines, those quick bursts of hype or the people who say it's all over, influence your understanding of the metaverse. Go deeper, look past the surface, and come to your own conclusions.
Because the metaverse is so much more than just a trendy word or a passing fad. It's a complex, constantly changing ecosystem with huge potential and, some risks too. That brings us to the end of our Metaverse Deep Dive. We hope this deep dive has piqued your curiosity, given you a new perspective on the metaverse, and maybe even inspired you to explore this new world yourself. Until next time, keep your minds open, your coffee's brewing, and, as always, keep diving deep into the topics that matter.